Global financial markets surged and crude oil prices tumbled over 6% following Donald Trump's sudden decision to call off those major military strikes against Iran. The abrupt pivot shaved Brent crude below $84 a barrel and even triggered intense debate on Wall Street over the primary catalyst behind this restraint by the White House. One dominant narrative points directly to intense lobbying from West Asian capitals. Now, key regional heavyweights from West Asia, led by Saudi Arabia, and Saudi Crown Prince Mohammed bin Salman reportedly pressed Washington for a peaceful resolution as ongoing clashes threatened vital maritime trade routes. Regional leaders stressed that a full-scale conflagration would trigger catastrophic capital flight, halt mega projects, and even destabilize critical energy infrastructure. Conversely, macro analysts argue that domestic economic imperatives ultimately forced the administration's hand to pull back from those heavy strikes on Iran. Surging fuel costs in the US have driven US retail gasoline averages above $4 a gallon, fueling headline inflation to 4.1%. And that is more than double the Federal Reserve's target and threatens Republican prospects ahead of the upcoming midterm elections. Recent market trend around China, Japan, and India reducing exposure to US treasuries reflects shifting global financial dynamics. While not a sudden dump, these nations are gradually diversifying reserves and rising US debt, amid rising US debt, currency pressures, and geopolitical considerations. Japan remains the largest holder but has intervened to support the yen, while China and India have been trimming holdings strategically, focusing on stability. Furthermore, the threat of sustained military engagement had previously sent 10-year US Treasury yields testing 18-month highs near 4.71%. The de-escalation announcement provided immediate relief, pulling the 10-year Treasury yield down roughly 5 basis points to 4.65% and easing pressure on federal debt servicing costs. Ultimately, the tactical pause has successfully cooled market volatility, offering temporary relief to global supply chains and risk assets alike. And earlier, I spoke with Ross Darrell Feingold, political analyst from Taipei, on the issue. Here's what he has to say.
Clearly, President Trump has a very good relationship with the leaders of those countries. We know that from his visit. We know that from their visits to the White House, trade deals, agreements to purchase U.S. weapons. So I think it's fair to say that President Trump will give them lots of time. He will certainly speak to them on the phone and hear their views. Ultimately, though, of course, President Trump is going to do what he thinks is best for U.S. national security. So although the regional leaders certainly don't want a conflict, and frankly, I don't think President Trump wants the conflict to continue either. But if President Trump ultimately decides that he does have to use force, he will. So I don't think it's accurate to say that their views alone are the persuading factor here.